All right, starting the recording. Thanks for watching, everybody. Today we're going to go through, just standard stuff, but I also want to focus on some single stocks. So for now, we'll just do a quick, quick view here of the S&P. Yeah, everything else is pretty extended here. I'll also show some quick charts on like metals and whatnot. You'll have to excuse me. I had all my charts and drawings and stuff wiped out today, or they reverted back to like 3 or 4 weeks ago. So it's been kind of a disaster trying to get everything all back in order. But it is what it is. All right, let's rock and roll here. So, so right now we're looking at the daily. We're looking at the daily level here for the S&P itself. And here, let me get some of that out of here. So right now, we've got this this I wouldn't say high volume, but we've got this this bullish push out of any sort of channel range here. I mean, it is a blow off top, so what do you want? These things are expected. So I guess what I wanted to show here was that there is there's a pattern here. It's called ending diagonal, and I think we talked about this a little bit last week about the bullish path. Now, one thing I wanted to call out here was that it's not necessarily, I don't want to say it's done because it's almost always famous last words, but this is a blow up top, and you can see that clearly with you can also see that clearly here with and I'm sorry if you can hear some chatter in the background. My wife is talking very, very loud on her work call. I can't kill her. There'll be witnesses. Anyways, sorry. Wait, what happened? I blacked out. anyways, um, so to get with it here, you're starting to see, we've had this RSI elevated for a significant period of time, and if you look at other times here where we've had this sort of like release of pressure, it's not necessarily like I would say a super solid like the best indicator, but in combination with others, I think it's a very good one. So I think the status of the market here is very, quite frankly, ridiculous. But you can still see some historical patterns here where you don't really get a lot of relief at times if you do have these elevated RSIs. Like you can also see these dips and stuff too, where you don't really get a high RSI. You just get a kind of a slow grind kind of dip. And also too, where we have like a news-based event, we were already kind of trending down with weakness, and then we did get this like. I find it funny the timing, at least, from like a weekly DeMark indicator. This is right when we had the tariff stuff launched. So I mean, the timing is you can't deny it. But anyways, so to kind of summarize this here, this kind of seems like a very, very long-term sort of structure here. But now we're in like the real like mania phase, where it's gone like truly parabolic. If you look at something like, I'm not going to spend too much time on this just because there's really nothing to say. I mean, here you go. Here's SOX semiconductors. If you look at this just without any drawings, any lines or whatever, I mean, come on, this is ridiculous. But there's somebody out there making a crap ton of money. Wish it was me. But so here we go, 71%. And here, let's actually measure this out. So 71% here in 50 days, 49 days. That's an incredible ascent. I mean, the market value that's been added alone is worth the GDP of several countries combined. And on what? Not really sure. Earnings. I mean, all these companies kind of buy and sell to each other. So it's like, I don't know. Semiconductors. I think, yeah, they're all driving this here. But if you look at companies like Google here, yeah, and sorry, these charts are way old for what I explained before. But you can kind of see here, you've got these like 5-wave structures around here. I mean, everything it's all very clearly impulsive. But you can also kind of start to see over time here that we've got some of the volume is becoming a little bit more erratic. You look at stuff like like Amazon. Like this kind of company here, I think we're looking at like if it holds at least, you'll start to see some sort of channel bound sort of price action. I'm not necessarily saying we'll see something, like this, but it's definitely possible given some of these wave counts. But yeah, I don't want to spend a lot of time on anything bearish at all, just because it's suicide to short right now. But if you look at other companies like Meta, you can kind of see that they do have some sort of like similar patterns that we can observe here, like head and shoulders, things like that. And after earnings, they did get kind of clobbered here. But I guess to kind of keep it to get it, let's see here if I can get you here. No video. There we go. Oops. Oh, sorry, that's not the right one. Here we go. Come on. So yeah, I mean, if you look at something like Nvidia, again, ridiculous. It my post yesterday said that it added an oracle's worth of market cap in like 4 days or something like that, with its recent ascent here. It had been in this consolidation pattern for quite some time. I mean, you can definitely see like a wave, like a really, really truncated wave but I think this is actually kind of a sloppy looking 5-wave structure here. But I mean, you can still kind of see that, market loves these nice round numbers like 230, stuff like that. So to kind of pull it back here and talk about the S&P, well, I'll show you the Nasdaq too, but there's really no confusion as to what's driving it. I mean, you can clearly see the insanity here. So, we've got, no matter which way you draw a trend line, everything has been tested only very, very briefly. Like you can see yesterday, we had just a quick little jet down, on some decent volume, but still any trend line that you draw here, you can also see that there's really just zero resistance. I think probably what's happening right now is that now that we're starting to see, and I want to be careful saying this, but usually there's good reasons for these things. I think one of the reasons that we're seeing like all this buying and things like that is like it's actually not necessarily like a couple of actors trying to bid up the market. Ever since we've had the Iran ceasefire stuff that's been going on here, what I've noticed is that like a lot of the 0 DTE options are being gamed. So before like I guess before a lot of this selling and stuff like that, we haven't really had billions and billions and billions worth of notional value of options, and market makers have to hedge. So, or like they have to take the opposite side of the trade. So if you have $10 billion worth of put volume or something like that, if everybody's trying to pile into 0 DTE puts, that means they have to buy. So they're either going to buy with futures or buy shares to prop up the market. So I think that a lot of that has been happening ever since we've taken off from the bottom here. So I think that really a lot of this is just driven by market makers having to hedge and everybody wanting to short. So I mean, the shorts really just kind of feed this, and then also too, once you get to the middle of this, kind of rally, you see a lot of participation. But what you're not seeing, so I guess on the surface, yes, super strong. If you were a amateur investor, you'd be like, oh man, it's going to the moon. Like, look at how strong it is. Like, well, it's kind of the opposite signal. If you look at something like my favorite waterfall chart here, you'll notice that this is just a epic divergence of price and broader participation. You can kind of see this same or a similar pattern here, kind of before, typically before you see like a little bit more of a sell-off. But when you do have major tops, you see a lot more of this pronounced. So I ran like that stuff was a little bit more of a news-driven sort of event. So even though the market had been kind of treading water here for a couple months, we started to see this quick draft down here, and that was the distribution as the Iran stuff was happening. And I think part of what that is here is like zoom in. Part of what that is, I think, is a sort of like a profit taking sort of everybody that bought bought large down here, to prop up the market, they had taken some time to distribute and probably, offload more inventory than, than you probably would you probably would expect. But when you see all this buying and stuff here, like, some of that is, some of that's like regular investor driven, or like institutional driven. But then you can start to see some of these like lower volume days, and then some of the higher volume spikes that happen, that kind of that kind of happen in between. So I guess that the main takeaway here, is that you've got this big massive divergence, and you also have the same thing, but this is also war driven. I think it's hilarious that you have exactly this driven by nothing but news cycle driven, headline driven volatility, and then you have things getting way worse. Like people understanding that this conflict is not really going to end anytime soon. Here, there's that new acronym NACHO, not a chance that Hormuz opens. But even then, you still see this massive rally, and I think that this is a sort of an engineered thing here, where a lot of these guys that have been accumulating on the way down here, they've definitely accomplished their mission and then some. But also too, I think that, I guess, like the central point here is that every time you have these like major tops or major market moves, they don't typically last a long time, just because it's very one-sided. The market needs balance in order to function properly, and you're starting to see a lot of stretching. So with these stretched RSIs, you're not getting very much participation at all. I mean, less than 50% of all the stocks in the S&P are trading above their 20-day moving average. That does not signal strength, even though it looks like strength on paper. It is not. We're kind of at the point too where there's a lot of bulls who want to try to, I guess, like, you cherry pick stats to prove their points, where it's like, look at all this revenue, and that kind of stuff. Well, it's still concentration of capital, and it's not necessarily signaling like the wider, like signaling the wider strength of the market. So during this entire time here, we've had oil prices, very elevated. If you look at this here, I mean, it just hasn't come down. So, I still kind of think that we're going to get some, we'll get some sort of shock or something here that'll send it a little bit higher. But still, with gas prices hovering closer to $5 a gallon, it's just squeezing everybody. So, with kind of put a cherry on top here. What we're looking at here is like, doesn't necessarily mean it's going to stop tomorrow, or this week or whatever. I kind of think we actually might get all the way to Nvidia earnings before you actually might see some sort of something. I kind of think we might have like a brief, bout of volatility. It might be like quick and sharp and violent, that kind of thing. But it might get bought up again, as like the summer's kind of boring for trading and not a lot of volume and stuff. But I think we're also in some pretty crazy times, so might not be that that quiet of a summer. So from a wavecom perspective, let's get into the details. So that's kind of like the overall view, is that things have been climbing the wall of worry. CPI, or like PPI, CPI has been insane with this last monthly measurement. Due to all the oil and everything, are finally actually starting to get some confused looks out there as to why the market keeps rallying, because none of this is really good. So from a zooming in standpoint here, I'm not really sure these counts are 100% correct, but I think that they're at least like close enough where if you miss like one little dip or one little wave, it's not going to matter much because it's still just an uptrend. But you can clearly see the participation, like all the volume's been very light as it just keeps driving up here. And you start to get these big probing cells. But if you notice, they don't really follow through. And I think some of that is just sellers testing buy support to see whether it's time to unload everything or not. And you can kind of see that happening here, where it's just, things just keep floating up, but that's also driven by a lot of market maker, hedging mechanics, kind of like using the system as an advantage, because you have the money to do it. So with that being said, I think that yes, this is like a wave 4 kind of thing here, and even if you can, at least like in the wider scheme of things, like I do think this is a pretty clear wave 2, wave 4, and then looking at the end here, just kind of doing this, off the cuff here. I still think we can see, some pretty, like you can kind of see like a 5-wave structure here with this wave 3, and it looks actually kind of symmetrical. So I'm thinking that, aligning with, yeah, okay. So I mean, might not be quite done here with wave 3. It might get up to like 74, 84 or something like that. So maybe we see something kind of like this, and then maybe creep up a little bit higher to like 7,500. I mean, I think that's a pretty big psychological number there. But also there's some other rules to consider, like trend lines and testing and stuff like that. So other than getting into the weeds about it, did you have a question, Roel? Sorry.
No, I was coughing.
Okay. So I guess we don't need to go into the super details about it. The only thing you need to watch for is are these like big sell days. So CPI was bad, PPI was bad, and then you've got these different tests, and they usually align with like news prompted sort of things. I think the ceasefire is not going to hold. The thing's been beaten to death. People are just not caring about it anymore. They only care about the price of gas, and I think you're probably going to get some sort of like rush to close something, or some sort of foreign intervention, with like additional oil supplies or something, just because that, like, the administration has no choice. They have to do something with gas prices, or else they're gonna get a whooping in November real bad, and they know it. So I think that's why they're trying to get it done early. But I still think there's going to be some more stuff that happens out like through summer and stuff. It's just never going to go as fast as you want. But I think that eventually prices are going to matter here. But again, since it's a blow-up top, probably not soon. Usually there's a catalyst, like if the Fed signals that they're going to hike rates or something, or if you get some sort of breadcrumbs, like a trial balloon from the administration about something else, you might get a sell trigger event. But I guess from my standpoint here, if I would say the new bifurcation line is like the 7,500. If we go above 7,500, then I think it just continues and there's no stopping it. Because by now there should have been enough news shocks or whatever. But it is what it is. It's a melt up. So you just gotta manage that risk. And also too, like I could be wrong with the counts. I mean, we could see something where we could, this could end on Friday, where let's say you get you could do like a really small kind of thing here, where it just gets nuts here, and there's just tons of volume, and then all of a sudden it just collapses. That happens pretty often with these types of bubbles. Need I remind you guys of what happened with silver? You've got this is kind of a pretty close. I don't know if allegory is the right word for it, but you can kind of see how it's got this jagged, irregular kind of pattern here. Like the waves overlap. You can't really discern any sort of like realistic wave counts. So that's just kind of confusion. But then all of a sudden you get this one kind of pump fake here, and I think you've kind of seen that with as you kind of zoom in here, we've seen some of that with some of the stronger selling here over the last couple days. But it just stops, and I think that part of it is just because even the bears don't want to step in yet because they know that they can get higher prices. So why sell now when you can wait and then tomorrow you get higher prices to sell at. So it's not just the bulls that are being greedy; it's the bears too. But now I'm convinced this is really like the last kind of last kind of move here before before something bigger happens. We've been on quite the run. But anyways, kind of top it off here. You get this huge sell-off in silver. I mean, this wouldn't really happen with indexes. There's controls in place for that, but you can still get a lot of this sort of this is definitely panic sell, definitely like stop loss orders, everything triggered, and that's I think what the bears are actually waiting for. So in prior crashes and things like that, like the definition of crash is really relative, I guess, or to the ear of the beholder, however you want to say it. But you can still kind of see things just kind of creeping up, and you still have this exchange of volume, but you don't necessarily have this collapse. I think the collapse is really if market makers are forced to hedge in different directions to like cover their like hedge their hedge. It's kind of a weird thing, but I think that all it takes is really it's just like a 3 or 4% down day, and then that'll trigger everybody's stops, and then the next day that first day will trigger lots of margin calls. Then the next day is when you get that follow through, and that's like that contagion that spreads to the market. Now, the only thing I'll say here mathematically that would be great if you short is that we've gone up so far that, I mean, think about it, you've got a 2% like a 2% move at 10,000 is a lot more point delta than a 2% move at 6,000. It's an additional couple percent there. So put options are expensive right now for good reason. Just because the market makers selling them are going to be on the hook for them, so they're charging high premiums because they everybody knows that this is pretty high. And the only other thing that I wanted to show really was SOX, because that is just that was incredible with how crazy of a rally that had. Okay, so pretty much from an index perspective, I guess I don't want to go. I don't really want to cover a bear scenario until you actually get some sort of if you get a big sell day. I'd be happy to do like another webinar or something like that, just to talk it through and get you guys some good levels. But I'm actually not like super confident in my charts today, just because of that of my tech snafu from today. So other than that, that's kind of what I'm thinking overall here. Just we're kind of just like sitting on the edge of the cliff, but we keep like climbing higher. So anyways, that's kind of that. Let's see here. Let's take a look at the yield. So this one is pretty important. The yield today hit a high of exactly 4.5%, which is nuts. I still think it's going to charge a little bit higher yet, but this anytime you get above 4.3%, it's bad news for debt and borrowing and inflation as well. And bond traders know this; they're the best in the business. So selling off bonds here because of the inflation potential. I'm actually surprised it didn't shoot up higher than this. So overall with the yield here, I kind of expect it to head up to like 4.5.5, maybe even 4.6. And yeah, it's one, look out for stories about the U.S. Cost to carry and borrowing in the next couple of weeks. So it's just economically a really bad thing, especially if people are getting pinched with gas prices and stuff. I guess I'll kind of relate to this here. From a personal story, it's like I've watched the price of trucks come down from like let's say a 2500 HD kind of thing. It's from $75,000 a year ago to now, or to then like 68, and then recently looking at one that was just a hair above 60,000, and thinking, well, I mean, now it makes a lot of sense because sales are down. Was it the 13.1% in March, in month over month here to prior year, and that's including fleet sales, which is what saved the auto industry last year. So that tells me that there's a significant amount of people that are not buying cars, and especially in the last month since March. And then also too, I saw part of the April data, and it also wasn't very good. So higher yields mean higher cost to borrow. So something that was already out of reach is going to be that much more out of reach. And until they get this oil thing figured out, I don't see any other way that's gonna, or any other thing that's gonna prop up the economy. So I think the weight of our own actions, I think, are really gonna be the thing that sinks the ship here. Okay, but that doesn't necessarily mean it happen tomorrow. Only once all the big boys have distributed all their shares to the unbeknownst. All right, so let's take a look here at at gold. Gold's kind of complicated right now. Silver is staying up. Silver wants more up, but I think it's still kind of range bound for now. I think that we are in a wave 4 with metals. It's actually probably better to show you the daily. I'm not so sure we're gonna see that like ABC anymore, but it's pretty clear that we're seeing like some sort of like triangle develop, and that's just really like a consolidation zone. You could have you could have this, but I'm not sure what's going to cause that now, just because yields are heading up and metals are always a inflation hedge, but you're not really seeing gold do much with it. And in fact, you're also seeing a lot of lighter volume, and I think that you probably, I think these guys want more. They want to accumulate more at a lower price yet. So I still think that you probably see this like 44, just like 4,400, and by the time it tests that, this 200 daily moving average is probably going to catch up and then it'll bounce on it. But this is kind of what I'm thinking here, where you can see kind of like a ABC sort of path. I'm not really like super confident in it, just because we did have kind of a touch here at the 50, and we could see even a brief sort of even something a little bit like this would still qualify, and then you could see kind of shoot up here, and then it was a wave 2 all the time. But typically you do see those, you do see a little bit more sell pressure there. So I wonder if we might be seeing like a maybe like a contract roll sort of thing here. But no, we're not. This is without contract rolls. It's like the spot price. So anyways, like longer term, gold and just metals in general, I think are going to shoot up again, as long as oil remains high and the yields remain high. And yeah, that's it. Not too complicated. With oil, it's we're getting a little bit of a pullback here. I think what I might do is because we might see something news driven that might do one of these things before we see like another launch up. But what I'm looking for here is actually more of a impulsive kind of wave, where it might keep running and then breach higher. And that might just be news based or whatever. But if my counts are correct, then that should reach up. But we'll see what happens with that. Kind of in a weird spot right now. Equities just keep running, rocking and rolling while bad data comes in. And again, I think it's just a manufactured thing to generate some exit liquidity for all these guys. Natural gas, nobody knows what's going on with this. Talked to lots of learned individuals, and nobody can really quite put their finger on why gas is, gas should be higher. You're starting to see some buys here. I think that these guys are starting to, at least gas traders are starting to wake up and see that there's going to be some, there's going to be some sort of, continuation here of the Strait of Hormuz drama. All right, so listen to Bitcoin. So Bitcoin's a little not strange. So I had this extension zone flagged for quite some time. It's kind of bouncing under this 200 daily moving average. I'm not really sure if crypto's going to be the liquidity savior here of the market, or like a sector rotation kind of thing, I think what we saw today was pretty telling. Where, well, one, the Dow didn't do anything today, and in Bitcoin kind of just stunk. It didn't really have a ton of volume, but it still rejected, rejected 2%. So I guess from a pattern standpoint, this does look like a pretty very formidable bear flag. So I do think that you will get some sort of some sort of slump in crypto here sometime soon. I would say if it was going to remain strong, it probably would have punched through higher back in January to resume its march higher. But it's just been on a decline for quite some time here. But with everything, I'm not really sure what's going to be like a catalyst behind it that'll kick it off the edge. I showed stocks before. This is just ridiculous. It's like, hey, let's just move the lines every day and pick a new target. Sometimes, I guess, like a public service announcement here, technical analysis, like especially when you have blow up tops and stuff like that, I think it's one of the only things that actually works to identify like extension levels, and but you still have that random component, which is you're never really sure which level it's going to stop at. So you can't really make good judgments on it. So that's why I don't really like to trade the blow up tops, and I do think that a lot of people that have made money in these things, like they sold out way too early. And that's typically how it goes. And then they buy back in, and that's when they get crushed. So that's typically, it actually, it happened to Isaac Newton. And during the tulip mania, initially he made a whole bunch of money, but then he got back in and then lost it all. So, the guy invented calculus, loses all of his money in the market, at least in the tulip market. But that's kind of what's going on with this right now. So Nvidia, yeah. I mean, I just labeled this pinnacle of greed for fun. Yeah, I think probably 230 is realistic, if not a little bit higher yet. I mean, they still got some buying here, and I wonder maybe if it's part of this is more market maker mechanics, where there's like buy liquidity coming in here just because they have to hedge all the shorts. It's driving me nuts. My charts aren't updated. Okay, so Tesla, I think it just wants to inch a little bit higher. I added some, add some shorts around here, TSLQ. I mean, because again, you never really know where it's going to pivot. So I'm thinking that, you probably get at least some sort of, let's see here, maybe like, something like this, if it was going to continue higher. I mean, there's no guarantee, of course, because some of these waves counts can be weird. But like I showed before, if it was a ABC and we're now in a C leg, you could make the argument here that we're still in like a wave uptrend, and highly likely we'll see like 464 or something like that before, or maybe even 480. I hope not 480, just because of TSL or TSLQ. But yeah, so those are kind of like the main ones I typically follow. Any questions before I move on to single stocks? Just kind of briefly cover them. Right, I know covering a lot of ground today. And again, I apologize for not having these charts really looking good. So one note on these like covered call funds here. These guys don't actually appreciate in volume by a significant amount, just because of the nature of the fund. It's really more of like an income-based kind of thing. So anything like SPY, QQQ, so anything these guys have have a dividend, the price adjusts accordingly because of the because of the payout and stuff. But why I haven't really entered these is just because, I mean, it's in the stratosphere, and even if it does head up a little bit more, I still don't think anything long any equity is really a good idea that has a chart that looks like this. Just in my trading career, it's just you're cruising for a bruise in here if you're buying in at these levels, thinking that it's gonna it's gonna continue for forever. I'm more of the patience kind of camp here, where I think that you've got we've been looking at the the index charts for quite some time today, but when you look at some of these things here, it's just not a good buy-in. But if you do look at the dividends, the dividends are huge. So this is why people buy these funds. And I guess I'll kind of explain the nature of these covered call funds. Are they don't really make a lot of money, or like they don't appreciate in price that much when they're I guess when the market's going up. So that's why you don't really see like a huge yeah, okay, here you go. So like if you're holding this all the way from the bottom, you've really only made what, 11, 12%, that kind of thing. But the dividend, that's the sleeper there. Even though it's been a massive rally, like this is still just pale in comparison to the actual S&P, which has made an equivalent of so like 18%. So it's definitely had outsized returns compared to some of these different income generated funds, but that's just because of the nature of the beast. So when you sell calls, you're hoping that the price only goes up a little bit, but since prices have gone up huge, like the value of the shares within that fund appreciate, but you're also giving some of that back to the market because because of the way you have to essentially cover your call options, or you have to roll them up and out. So I think back in summer we had like the quantum stocks, they just decided to rip one day and then never stop for a while, and that was the first major peak. And then when you're selling call options against that, you just have to keep rolling them, because then eventually when you do get a pivot, then you get like all that premium back and then some. But it's just it's a patient man's game. But this kind of these kind of ETFs, they kind of remove that, or they remove that sort of concern. So like somebody else does it for you. So the dividends are just a result of the premium getting sold on the shares of whatever this holds. So that's kind of why I like them. And also too, it's just like a passive kind of thing. So if let's say you're retired or whatever, you don't really want to play too much on the stock market. This is something that could, or at least like funds like this, you could get a pretty good smattering of the entire market from a diversification standpoint. So like, for example, Bitcoin. Okay, so Bitcoin, this is something I'm actually going to plow a lot of money into as soon as it drops. I showed you the Bitcoin chart. If it actually does hit like 52,000, or maybe even 48, that's something like that. This fund, this fund still has a huge dividend. And if you could pick up shares for $22 a share for dividend that pays 80 cents on that share, over time, and that's a month. Over time, that's gonna stack up for a lot. So even if it doesn't really move much, you're still essentially locking in a dividend at a very high premium. Sorry, not high premium. You are locking in a dividend at a very low entry price, if that makes sense. So it's like, I would compare it to, Grandma Gladys buying, a whole bunch of shares of AT&T, back in 1936, and then never sells them. And then that's what she lives off of. There's just the dividends. So it's just one strategy. I do like the strategy. But I just wanted to make sure that I at least like explain some of the dynamics behind it. So also too, like for example, I don't trade small caps as a matter of principle. Once you've traded small caps, it's just very erratic, and it's actually kind of difficult to make money with small caps. A lot of the price action doesn't really make a lot of sense. It's just kind of a speculator's game. But these I still think are way better than just holding, like buying the S, or like buying SPY or QQQ, and just sitting on it, just because it all kind of shakes out in the end. I think there's a little bit lower risk. Some people would disagree with me, just because, like for example, they don't really have like a ton of money in them, but these are becoming more popular. Where if you look at something like SPY, it's got it's got almost $10 billion in that fund. So it's the same thing with this QQQI. So like if you want to get your money out, that kind of thing, anytime you want it, there's plenty of liquidity there. There's plenty of there's plenty of money in the pool, that kind of thing. Okay, yeah. So some of these, these are all really kind of the same thing. Covered call funds. So like Gold. This is the one oh no, sorry. Oh, here we go. GLDI. This is the one I sold out of before. It hasn't really moved much since then, just because it's been kind of consolidating. But or like, you know, post that dividend. What did that pay? Yeah, here we go. So it's about maybe a little bit less than what I sold out here, but still, I like, I'm kind of hoping that we see something like this, and then you know, if we do see that sort of like wave 1, 2, 3, 4 by rocket, this will be a good one to hold, including, you know, with those dividends. And I bet you the dividends over one here. Yeah, oh yeah, way higher. Yeah, it's just it's a proxy of these shares. So I mean, in a good year, these things could probably make 25, 30%. But that's if you're patient and play the charts well. Again, it's all about timing with entries and exits. And even if you get a bad entry, then that's kind of how it goes sometimes. You can buy put options on it. You can do all sorts of stuff. You can cost average. It depends on your investing style. But I guess to kind of summarize here, with these types of funds, like these high income ETFs or covered call funds, these are all like quantum is not one, but these at least give you exposure to like a lot of different sections of the market without necessarily having risk of, I guess, like I guess you could say it gives you like potentially higher returns for about the same risk as like buying something like SPY. But SPY, like if you do have a small pullback in SPY, you're not going to get that large of a pullback in a like in a covered call fund, because that it's like a mini hedge kind of by design. Okay, so that's that. I wanted to make sure I touched on that. I got a couple of questions on the income side. All right, so now let's take. Sorry, before we move on, any questions about that? Does that make sense? Okay, great. So some of the different single stocks here I wanted to touch on. So QBTS here, and I want to make. You know what? Actually, let me start out with Roblox, because there's a point I want to make here. So Roblox is actually it's a bit of a surprise with what happened to Roblox here, because when you're looking at measurements and field levels and stuff, like there's volume shelves and all this other crap that you look at. These like the sellers had to essentially gap down the stock below significant like multi-year support, not multi-year, sorry, like multi-month kind of support, and that to me is kind of like a sign that maybe somebody had like a very large short position that wanted to really push on the market. And and on these single stocks, sometimes you can get lucky with that, where it's like it's the final move down. But I do think here that you've got this kind of blow off top thing here. Then you've got like a very long kind of like a 5-wave sort of corrective series. And I think that if this thing actually does take off, we got a weekly buy signal here. We had another one here, and that's where I bought at the first time here. So yeah, the shares are underwater, unfortunately, but with patience, you could see a recovery. Let's just do a quick here. 1 second. So let's assume here that we've hit a low, or we've hit a interim low. So we've got a big buy here. So somebody's protecting a position. In my opinion, it's like if you drift slightly lower than that, that might just be the same person accumulating and allowing the selling. And like that's kind of actually what I was hoping for in quantum stocks, is that my positions are a little bit beat up, but I'd say you could leave and go on vacation and come back 5 days later and it could be up 30%. Yeah, I mean, they're volatile like that, but I want to pick up more shares the lower it goes, just because I like the quantum stocks, I guess. But so what you could see, if this stock really is going to go to hell in a handbasket, what you could see is maybe like a slightly lower low, but after some sort of appreciation. So once you, this looks a little bit better symmetrically. So that's why I kind of think that the 80s is a realistic price target for this, just because longer term, if you do see something like this really does kind of look like a wave 3. I'll kind of show you what I mean here. Make it a different color. So like a wave 3 within, or sorry, like 5 waves within the 3, that kind of thing, without getting nerdy about it. Sometimes you just take a step back and look at some of these higher level counts. So, right now I think we're going through that capitulation phase for buying. And I guess what I wanted to say about it is that's always why, you don't want to go in like too large at first, just because in case the trade goes against you, if it sells down, yeah, it could hurt temporarily. But if you plan on buying more, then this would be like a great spot to do that. And I think I am going to do something like that tomorrow, is pick up some more shares here. And the reason is, I guess the final point in this, why I wanted to start out with Roblox, is that you also see the same kind of chart with like Campbell's, where you pick up at some of these different points where you see like a lot of buying and appreciation, and then you just see it kind of keep drifting lower. But that's not necessarily like the end of all things here. What you really want to look for with some of these other stocks is Graham's number. It's a really quick way to really quick way to do like a fundamental valuation without having to be a mathematical savant kind of thing. And all it is just taking book value divided by outstanding shares. And Benjamin Graham, that's the one who kind of came up with this number. That's what Buffett uses a lot of. And it's really just like like the quick ratio, like some of those other things, like they matter, but not as much as like if you're just going to pick it up and hold the shares. So something like these guys, like they pay dividends, not a lot, but it's something, right? So there's something for your time while you hold these shares. So what I'm looking for in some of these different stocks, well, first of all, you have to be profitable, right? Like like Roblox gets a ton of cash, but their earnings per share isn't necessarily what is it? Yeah, so like they might have like negative earnings per share, but they're still a growing company. So, and it's a software kind of company, so they have content creators. They have it's an ecosystem. You're not necessarily just buying like a video game company like Steam, even though Steam has done a lot of other stuff. But the point I'm trying to make here is that you want to find these stocks here that have gotten like truly beat up and are trading below their Graham's number here. So $20 a share. That's still what is that? That's still about 12-13% lower than what the fair value is. So like if they had to liquidate and sell everything tomorrow, they could get $23.50, for all their stuff, at least on paper. So right now it's trading at a discount, and that's the big point I wanted to get across. Hopefully that makes sense. So with some of these different stocks that, like you never have all the information you need at the time, right? So you're looking at the chart, you're like, okay, this looks like a good spot to buy, or like, this is a good, typical bounce point for fib level. And then you wake up the next morning, you're like, oh, well, great, awesome. Now it's all down and everybody's pissed off about it. But I think if you're patient enough just to wait for some of the waves, you could see something a little bit more like this, where you have a little bit longer of a consolidation zone like this, kind of like, let's say price drifts around here for a couple of weeks, a couple months, that kind of thing. That's just accumulation. So a lot of these institutions, that's where they're picking this stuff up, and then before you know it, 2-3 years later, you get some sort of I mean, like you play the long game with this stuff. Like you can speculate, sure, but really what you want to do is you want to try to make money in the long run, even though you might have some short-term pain. At least understanding like where you're at and like what the actual like valuation is, I think is important for that psychological standpoint. So like, yeah, I'm not happy that Roblox gap down and stuff like that, but we're still at a very, very large like volume support level, and I think just over time with patience, you should see it recover, because it really is a cash cow monster. But anyways, like Campbell's, I mean, it's a boring stock, but it's still one that I think it pays a dividend, and it's trading below, or it's trading at a discount. It's really only two things you need to know. So some of the other ones here, So IEP, this is Icahn Enterprises here. This is a good old Carl stock. This one has been really this one's been kind of hovering around that $8 to $9 a share for quite some time, and this is really that accumulation phase. So Carl's been getting his butt kicked here. They've really had like kind of a poor time lately, but they still keep paying dividends, and they used to have one of the highest dividends, if not one of the top 5, 10, something like that, in the whole business. So this is kind of nice to pick up at these levels, but I don't know, you could probably find better stocks that pay or that have better prospects. I see all this red here for earnings. That's not good. You look at something like Campbell's, green. So they make money, except recently. Why didn't they make money? Well, you have to read their 10K for that. So that's that. Let's see here, Rocket Lab. This one is not trading at a discount. But hey, that they're following everything else. God, this chart looks like terrible. But they're still just blasting off to the moon like a rocket company should. But that one I'm not touching for a while. This one, IIPR. This is I think like this is just like industrial real estate. And let's see here. So these guys are losing money, to be fair, but as you kind of see here, like it's an average. So corporate real estate and stuff has been kind of declining with value. They're not really getting the premiums there, but people are going back to work, and office space and stuff is still going to be needed, and that's kind of what these guys do. So they might have a lot of inventory that's kind of taking up some cash on their books, but I guess suffice to say here that I do see kind of like a 5 wave down here, and it's just again one of those things that's it's trading below book value. And if you think that real estate's or like industrial real estate and things like that are going to recover, then it's probably a decent play. Some of these other guys like United Natural Foods, like, isn't it interesting how one company could do a lot better than another and still sell the same crap? So I've always been amazed by that, like how earnings are played. But these guys are trading well above book value now. The time to get in here was back at the 20s, where we had that bull flag here. I think I did pick up some. I'm not sure if I did it for. I can't remember what portfolio. And this one I wanted to touch on. So PSEC, this one's probably time to exit here, or their dividend is still like very high for what their share price is, and they also pay monthly here. So this stock really is just like a dividend farm for the owners, but it's also trading at a huge discount to what their book value is. So if they went under, they had to sell off all their stuff. But this is still, I guess that the real warning here is that this is still private equity, and you're not really sure like who they've invested in, and like downstream, all this money could just evaporate one day, kind of like Enron or one of those other companies. So I think if you've got break even, or if you're holding this for at least 9 months, you're let's say you bought it at 3 or slightly above, you're probably at break even with those dividends, if not better. Anyways, I wouldn't really touch anything with private equity right now. Those risks have spiraled. I wouldn't say out of control, but they're definitely not understated. So anyways, that's just a note on that one. So probably PSEC's a good time to look for the exit on that one. Conagra, this one I think is another very undervalued kind of stock here. Again, this is another one that pays some decent dividends, and the shares are also now pretty low. And I can also kind of see here that this one actually is one of the cleanest charts I've seen all day here, where you can definitely see like a 5 wave kind of structure here. So I think that if we are going to head into some sort of recession or whatever, like people aren't going to be going out to dinner, like they're going to be eating Campbell's soup in front of the front of the fire, lamenting to their spouses about how good things used to be. And remember when gas was $2.40, whatever. Anyways, that's really the concept I'm trying to get across here, guys, is that like, it really is the tale of two cities. You got your Nasdaq, and then you've got your ConAgra Foods. Okay, so and these guys produce, I don't know, 10% of the world's food, maybe more. Like there's probably only 10 companies or maybe 9 really that produce the vast majority of all the food you see in the supermarkets. It's not that it's not that it's an exciting thing to invest in, but these companies have been around for forever and they pay dividends and they have massive infrastructure. In my opinion, like if you do have some sort of big recession or something like that, like these are the companies that are too big to fail. Like you cannot have a major food producer go under just from the production capacity alone. So it's not like making cars that people got to eat, they got to sleep. So anyways, see here, Kraft Heinz, these guys have just been kind of drifting down for a while, but again, they still pay a dividend and they're still trading well below that book value there. And if you like ketchup, there you go. But I know that they've done some divestiture and things like that. But these guys have still been green in every earnings report. I just think they're getting unfairly punished. But I also think that this is where you're starting to see that accumulation from big institutions for the next sort of like sector rotation. That's pretty much it. Hopefully I got the point across here. Oh, one last thing. Some talk about the Smucker's company here. This guy, I ran across this today. This one, it's trading above its book value here. Does pay a dividend, but it's just another option if you wanted to take a look at something like that. All right. Any other, I guess, questions, comments, concerns? You had asked about wave 4 and wave 5. I think it's kind of the gloves are off right now. I think if it hits 7,500 for the S&P, and then keeps going, then I think you're going to have a different. I think you're going to have a different market in general. I think it's going to be a little bit more scary after that. But okay, well, I guess I'll stop the recording here. Thank you guys for listening. I know covered a lot of ground today, so send me a DM or something like that if you have any questions or post a discussion. Thank you.